Good morning, everyone. Welcome to the morning Kappa 8 on a Wednesday. I'm here to present the midweek futures technical brief. So we are currently on week 5, October 2025, and this is the last week of the month before we head on to the November month. So on this page, we are looking at the most popular products traded by traders. And on this table, we can see that there are some movements which basically focus on the US indices. For the third week in a row, whereby it's been trading on neutral, it's popped up to become positive in the recent week due to the continuous AI theme, which is relentlessly in the marketplace, and this has impacted most of the indices, and from a neutral position, is now moved back to positive. We're on the right hand side here, and Nikkei is still trading on positive setup, and for the coverage on our grains and oil is all negative, and this is a continuous trend which is very persistent, and any signs of turnaround seems to be a difficult task for the current prices of corn, soybean oil, and also soybean. For metals, interestingly, from a very strong rally for gold as well as for silver, both have now turned into neutral. This is due to profit taking and also rebalancing of the portfolios, especially in commodities against the equities. So we move on to our local product here, FCPO. FCPO also has been very much on a decline. This is due to after the peak of buying, for Diwali, and currently buyers are not in the market, and prices are not seen to be too supportive at this current level. We have to maintain probably a downward bias for maybe a couple of weeks before we can see a possible turnaround in prices. And now we move on to the US weather, because in the next product, we are going to focus on natural gas. And natural gas depends very much on the weather over in the US, whereby the temperatures are showing signs of cooling. From where we were the previous week, the hotter weather now has turned to near normal. This is what they call a cyclical thing, and every single year coming to the end of the year, temperatures to drop, and from where we are looking at the mapping of temperatures in the US, we can see that the cooler weather is approaching. So this is very interesting for natural gas. And also natural gas want to bring the attention to everyone that there has actually been quite a major turnaround. There's a rounding bottom, I've indicated it in the circle. And this is showing signs that maybe the long-term trend could be on the upside. And therefore, for the product that we are covering today, natural gas is micro Henry Hub natural gas is in our focus. And basically, the prices have been moving, and it's been relying on the US weather forecast, which has actually turned cooler. This would actually boost heating demand in the northern parts of the country. And looking at the template here, all right, the existing profile remains to be not neutral. And for short-term setup, it is positive. So therefore, we are looking for a reference price at 3.79. Current price is 3.82. The potential profit price, if it does rise, will be 4.15, which will give us a value of $360. And if it goes wrong, potential loss price will be below the 3.60, which will give us a loss of $190. So also we have got micro crude oil in focus. This was actually posted in our market guide chat group, and in fact, the current situation is that it's already in a trigger, and this is mainly due to the news that has been flowing in the market, and supply glut is one of those things which pointed to the OPEC plus, which may actually raise production again. And also, the group is leaning towards a modest output increase for December when it meets this Sunday. And Saudi Arabia has pushed to regain market share, which they have lost quite a bit to US. And adding to the bearish sentiment, analysts has also noted that US sanction against Russian oil companies could also be less severe, and therefore supply would be in abundance. So for this, we are looking at current profile of neutral, and setup is negative. As I mentioned earlier on, the 60.60 reference price has already been triggered. And for that, we are looking at a potential profit price at 58.60, which would give a value of US dollar 200. And if for any termination to happen, it will be above 60.60, which is going to be a loss of US 200 US dollar. So that's all I have on my side. I'll pass on to Joseph. Thank you so much.
Right. Thank you, Vincent. Morning, everyone. Today, Hong Kong market will be closed for holiday. Before that, just want to a quick update on the Hong Kong market. You can see that based on yesterday price actions, the market resort to profit taking yesterday, right? And tomorrow, Thursday, according to the news, right, Trump's going to meet Xi Jinping over at the Korea. So I think I do expect that tomorrow, Thursday, on Hong Kong market, right, it will be a very quiet sessions until we have more informations from the meeting from the both leaders. But right now, right, we do see that the tech stock do experience a mild profit taking, but the bank stocks and the insurance company a bit bucking the trend, supporting the market overall right now. So for Hong Kong market, very key and crucial support will be the 25,000 point levels. On the upside, will be the recent breakout point, which is 26,400 point level, i.e. Hang Seng has to stay above the 20 days moving average to keep the momentum intact, right? And a quick move towards the Europe and the US market, right? We do see that the US market continue to move on the high fashions. This October month is the earning seasons, and it will stretch a bit towards the mid of November, right? And yesterday, right, we do see a few companies that have released their results, and I think more attentions will be tonight. Alphabet, the parent company of Google, and as well as the Microsoft that are going to announce their earnings today, followed by the Apple and Amazon. Based on yesterday announcement, one of the company that really caught my attentions is the Sophie technology. So recall that think about 2 weeks earlier, right? Bank stocks have released a very good results, and yesterday, Sophie Tech, a fintech company that do online lending, right, also have beat the market expectations and revised upwards on the revenue guidance. And look at the share price movement as of yesterday, right? Initially, the stock do experience a mild profit taking. It went down, but by the end of the sessions, very strong buying momentum emerged, and the stock have closed at the near the day high, right? So it shows that overall, bulls have the technical upper hand as of yesterday. So I think the overall performance in the finance related sectors in the US remains strong. And if you read between the lines, right, seemingly the local consumer market remains very strong at the US region right now. So as such, I'll be looking like 1 week ahead, right? On the next week, a firm, a buy now pay later firm, is going to announce their result as well. So for this next a few days time, right, I'll be looking whether a firm will cross above their immediate resistance. So if the breakout happen, right, I think the trading opportunity will arise on the AFRM, this company. Now, secondly, right, next week we're going to have another consumer stock, i.e. Shopify, is going to release their result as well. So riding on this momentum of the strong consumer market, right? I do expect that the Shopify momentum do extended until next week, right? So this October, right, until the next month, mid November, we do have a lot of trading opportunity. And in fact, I would like to use this word. The earnings gap, right? If one company do have a very strong results, then you can actually look at their peers, right? That actually give you some trading advantage using on the different calendar on the US earnings seasons. One of the recent example is that in our coaching group, right, 2 weeks ago, I do mention to look at the General Motor and as well as the Ford, where General Motors have a very good results and follow by Ford 5 days gap and give us very good opportunities on the Ford. Ford eventually the stock have a gap up and search on a multi-month high. So as for come back to Malaysia market, right, I will still keep a bullish bias on the FKRI, support unchanged at 1535. And FCPO have moved lower, right, after it break past the 4350 level. So you can see that for the FCPO, right, we have actually underwent the MPUB stat for the month of August as well as September. And right now, the FCPO is trading near a 2 months low. That shows that the market still have a concern on the productions level and also the export data. Excuse me. So based on the overall technical setup, we still remains bearish bias right now. Now over at the this CPU report, do allow me to spend another 2 minutes here. Is that when we look at the IMAN's report, right? One of a very key important level that will be looked at is actually a stop loss point. So in this report, we are adopting a trend following strategies, and you can see that for the past 2 months, the CPO there will be sometimes up and sometimes down, and you keep flipping your positions up and down, that you'll incur a lot of trading loss, and eventually, right, you get burned out. So from my experience, a lot of retail investors, that is what they actually are being worn out by this kind of market. And For us, we prefer a trend trading strategy. So we set a stop loss level. As long as stop loss level didn't trigger, then we'll hold on our positions until it triggered. Then we actually ride on the trend again. So in your trading, you can actually adopt the trend trading strategies and as well as the intraday strategies, right? But as a beginner, all right, my view is that we should have some trend trading strategies that making trend as your friend. And right now, I think for Iman's trading positions, according to this report from floating loss, right now he has become in the money. So hopefully the FCPO will have a bit more corrections that hit on the 4250 and 4150. And as we can see that in the bearish setup, right, support will be weak and resistance will be strong. So do follow on the Iman's report and follow closely on how he actually set his stop loss on a very following the trend. Okay, and as for Malaysian market, I do see a few interesting counters after I do a screening for yesterday, right? I do see we just take a look at a few counters. Firstly, the Telecom Malaysia. This is the counter that always that I'll use it as sample, right, in my SMFI event that I think this counter, right, is one of the top call by Jeffrey, our telco analyst. And you can see that last week I just have concluded our Terengganu talk at the Bursa event. And despite that the market are quite volatile, right, the stocks continue to move slightly higher, and right now it have hit the R1 and going to challenge the R2, right? For this kind of big cap stocks, you can actually not only to buy the stocks to invest for the dividends, you may also can consider to adopt a bit of leverage strategies on these big cap counters. If you're interested, do actually contact our dealers. Remind easier to understand how to have a little bit of higher returns on these big cap stocks. Right, and in terms of tech stocks, we do see that MPI momentum have picked up again, and SAP Engineering also based on the price volume profile. Right now it's trading above the resistance with on the back of a strong momentum. Now, another counters that I do like to highlight here is a DXN holdings, where research have a buy call right now. And DXN is one of the dividend stocks that we have been saying in our reports. And I do notice that after a few months of consolidations, DXN managed to break past the 52 level of resistance, and right now is moving towards 56 and 60 cents. Also understand that most of the investors, some like big cap, some go for mid cap, and some would like to have stocks that are below 1 ringgit. I think over the week, one of the stock that really caught my attention is the DXN that finally have a breakout from a multi-month of consolidations. So hopefully it will be moving upwards, and at this level, right, the stock is still giving a very high yield on their dividends based on the FY26. Do spend some time to look at Siang report and see what's the latest yield right now. As for another tech stocks, I'll be looking at MI Tech this morning. That break past 3 ringgit at 10 cents. Next level will be 3 ringgit 30 cents and followed by 3 ringgit and 45 cents. Downside support is 2 ringgit 95 cents. And secondly, we have Asia X, one of the beneficiary counters of the Visit Malaysia year. And also the stock have a break past resistance of 1 ringgit and 77 cents. And right now heading towards 1 ringgit and 90 cents and followed by 2 ringgit mark. Downside support is 1 ringgit and 65 cents. So we have two breakout stocks this morning. Firstly, a tech stocks, MI Tech, and followed by Asia X. So I'll stop here and pass on to Wei Xiang on the Nestle report. Thank you.
Hey, thanks, Joseph. Morning, everyone. Let me continue with a results review note on Nestle Malaysia. We are maintaining our buy call here with a new target price of 120 ringgit. Essentially, we consider 9-month results as within our expectation, but it's probably ahead of the consensus, with core net profit coming in at 421 million, which was up 3% year-on-year. And we anticipate going forward the earnings recovery to continue, and this will be underpinned by the robust top-line growth, and we expect more gross margin recovery towards the year end. Looking at numbers, 9 months sales was up 9% to 5.2 billion. This is supported by growth in both domestic and export markets. And we highlight the export sales actually increased by double-digit percentage in third quarter itself. That's mainly thanks to Nestle strategic role as Nestle Group's largest halal manufacturing hub. Meanwhile, in terms of the gross margin, it has remained under pressure, reflecting the heightened input costs, and as a result, the bottom line growth was rather modest at 3%. On a Q-on-Q basis, we saw revenue growing by 6% versus second quarter, as recovery momentum continued to be sustained on the back of normalizing consumer sentiment towards Nestle brands. And this, together with a favorable swing in marketing expenses, saw the quarter net profit jumping 11% Q-on-Q to 137 million. For dividends, they declared in total 1 ringgit 30 cent for 9 months. This is higher than the 1 ringgit and 5 cent in the same period last year. And we noticed that free cash flow has surged very strongly to 769 million from 157 million in 9 months 24. Going forward, we believe the current ongoing resurgence will be sustainable, especially considering the positive developments in the Gaza war. Besides that, the fall in key commodity prices, including cocoa, wheat, milk powder, and sugar, should propel margin recovery and further aided by the stronger ringgit. So all in, we are maintaining our buy call. We revised our target price slightly to 120 ringgit after a minor tweak to our earnings forecast. We continue to like the stock. The catalyst will be number one, normalizing consumer sentiment towards Nestle brands. Secondly, gross margin upside coming from easing input costs and favorable forex. And lastly, the promising export growth opportunities. On top of that, we also believe that the higher budget allocation for the SARA program in 2026 should also bode well for Nestle, given its market share and quality staple product offerings. So all in, maintain buy. Our target price is now 120 ringgit. Thank you so much for joining us this morning. Happy trading, and we look forward to seeing you again in the next morning kappa at 8. Thanks, everyone.